How are things going, Dave? We have the Fed today. It's been a long time since you and I talked about the markets. What's your view going into the Fed here? Do you think we're peaking out here in the Dixie up around this 97 level, or it looks like it could go either way? We're either setting up for a blow-off or possible failure here. Where's your head at?
Well, I remain bullish. The dollar index in here. I mean, from a technical and price action standpoint, the recent move off the October 14th lows is very encouraging to me. And I think if we can get above 97.42, which is the 618 retracement off of the 2014 highs, I'm sorry, the 2015 highs, I think we've got a good chance to accelerate higher. But you do bring up a good point. Much of it will depend on how the market interprets the Fed. I have some pretty strong opinions on the Fed. I don't think they can raise rates. I don't think they'll be able to raise rates for quite some time. So I think all this jawboning is a bunch of, just a waste of time. But if the market,
but do you think that they'll use the opportunity of financial markets recovering dramatically and China stabilizing? It's not, to me, it seems like whenever there's a meeting and S&Ps are weak and there's fear in global equity markets, they talk like doves. And now that we're near a 2100 print in the S&Ps, they may take the opportunity to sound more hawkish on the statement.
Yeah, and that's certainly the way they've been, and I think that adds to my argument that I think they're really trapped in a box. I think they realize that they don't have much of a choice in terms of they can talk all they want. They've been talking about raising rates for some time, and they haven't because the economy, by and large, yes, it's improved, but there's still a lot of weak spots in it. There's a lot of data points that are conflicting. Some are bullish, some are bearish, at least in terms of economics or economic indicators. So I think they kind of know that they're kind of trapped at this point. And the scary thing about it is if and when we have some sort of a recession or economic slowdown, and who knows? The full effects of some of the issues in China have not been felt yet, and those could take a couple more months. They don't really have a lot of ammunition to weather another downturn. Be it economic related or some wild card out of the blue, default in junk bonds or whatever the case may be. So I try not to get caught up too much in the day-to-day Fed because every day it seems to be a different story, which is rather disconcerting. But it is what it is.
You're an excellent technician, Dave. Do you know how to screen share on Hangout? You go up to the
I believe I do. I was looking at it before I came in here. There it is. So I can screen share. Does it allow me? Okay, perfect.
Yeah. So then we could see your looks. I always liked your charts, and your views are very technically based. So waiting for your charts to come up.
Yeah, I should let me know when you see a dollar index chart.
Interesting. You know what I love about these interviews in LAR is, before the ECB, I thought the dollar might run into trouble at 96.20. It just went through it like a hot knife in butter. But then the next day it pulled back to 96.20 before making new highs. And you actually have that as a potential buy point if the dollar pulls back. So it's almost like when you use different methods, I use different methods. But when people come to the same conclusion using different methods, to me it's almost like confluence and builds my conviction in a number. So you built my conviction about 96.20 being important on any pullback in the dollar.
And it's an interesting comment that you make. A lot of times people do arrive at similar decisions or similar conclusions, but using different methods. But at the end of the day, we're all looking at price bars. Yeah, there's probably a million different ways to interpret it, but I think if you're just keeping it real simple and kind of looking at general trends and whatnot, it's not terribly difficult to at least come up being on the right side of the market, hopefully more times than not. So again, today's meeting obviously, will probably be indicative of where we go. For me, it's this 97.40 level, and again, if you're an Elliott wave person or at least have some rudimentary knowledge, if this support level holds and serves as the catalyst, if we can get through 97.40, I do think that there's a lot of room to run here. This is a daily chart that I just popped up now. We've been in a really, really nasty, choppy range since March. I guess our next big hurdle would be 98.34, but let's get through the 97.42 level first. So, for me, as I've mentioned in previous interviews I've done with you, I kind of use the dollar index as my base case, and the other currencies should kind of follow in lockstep.
I do the same thing, Dave.
Yeah.
We're kindred spirits on that. It would be kind of like trading Apple without following the NASDAQ or Dow.
That's exactly right. Exactly right. So, for me, and I think for anybody listening here today that might be, let's say newer to currency trading, the dollar index is a quick and easy way to kind of assess where other currency pairs are going. Obviously, the euro is the most correlated to the dollar index, and some of the other pairs, they start to fall off in terms of correlations. But it's a good way to keep yourself aligned with the market. If you're bullish the dollar index, you can't be bullish the euro. One of them's wrong in terms of your conclusion.
I know you also do kind of like relative strength work too. So you kind of look at, if the dollar's strong, what's leading the way in the dollar? If the dollar's weak, what's leading the way? What is, what's coattailing strength? Yeah. What's coattailing weakness? I believe that someone's saying that we still see my screen, Adinda, rather than Dave's.
Oh, interesting. Yeah, I didn't see
you. That's not you. Maybe that's. How about now? MRC, do you see Dave's charts now? Everyone in the community, give me a Y if you see Dave's chart of the dollar index 4-hour chart.
Do you see it, Dale?
I see it. I just want to make sure everyone else does.
Yeah.
Because you know what, Dave? LAR is not about me or you. It's about everyone.
Absolutely.
So like the boss sings. No one wins unless everyone wins. So how about it, community? Can you see Dave Floyd's 4-hour dollar index chart? Give me a Y if you can. Before we move forward, I can see it. Anyone else? Let's just carry on, Dave.
Okay, yeah, that's a too bad, but hopefully, the description will suffice. But I guess, obviously, if I have a generally bullish view of the dollar in here, obviously with a pullback currently off of the recent highs, the opposite would be true in the euro. The euro's had obviously a good sell-off, and if I pull up my euro chart, we would see basically the mirror opposite, which is a little bit of a corrective rally in the euro, and I might be certainly considering getting short that particular currency into the 110.88, maybe up towards the 111.5 level, and then if prices begin to stall, I think we could head down towards the 108 level. Again, much of this will be dependent upon how the market, I don't think it's going to be what the Fed says today. I don't think they're probably going to say anything radically different. It's going to be how the market interprets it, which of course is always the most important thing and the one thing that's really not knowable in advance oftentimes. So, for me, I've got my game plan going into the meeting in terms of how I think prices might unfold. I would expect at some point, either today or in the next day or two, the euro to start trading lower, dollar index to start trading higher. Maybe the meeting today will provide that catalyst. I don't know. I'm not going to position myself ahead of that meeting. This market is a little bit too on and off in terms of temperament, to say the least, that I don't want to try to be outguessing what the market might do. It's perfectly okay if I maybe miss the first leg lower in the euro if that's what happens after the meeting today.
So are you like me, Dave? You consider this a roulette bet and you're going to be flat into the Fed?
Yeah, pretty much. I mean, I just don't see, at least in terms of like something like the euro, which is going to be so sensitive to any move in the dollar. I'm just not seeing, for me, it's a flip of a coin. It could easily spike higher, could easily spike lower. I'm not seeing a weighting towards me being correct by being short. I'm seeing a 50-50 outcome. And I guess in theory that's what we always shoot. That's what the odds always are. But I think there are times when you can put the charts in the overall environment, maybe in an environment where maybe you've got a 65-35 edge, and I'd be more comfortable with that. So I'm okay sitting on the sidelines. The other way to do it is, the crosses. I trade in the crosses quite a bit because there's times when the dollar pairs are just trading, let's say, and not in such a fluid manner. And one of the crosses I've been working with over the last, well, I always work with it, but in the last week or so, I've been short euro sterling. We were short last week from about 73.55, and
we were short from 75.
Awesome, even better. So,
well, we had nice divergence there. I'm glad you're bringing this one up, Dave, because I agree with you. I actually think we're going to 70.5, maybe 71.
Sure.
And if you look at the weekly chart of euro pound, that would be give you symmetry for a potential right shoulder on the weekly, and then the next time through 74.80 or so. Look at that.
I see that on the weekly.
Look at that. Are you a mind? Did you do the Vulcan mind meld on me, Dave?
Absolutely.
Absolutely. What a great interview. I mean, you're just confirming things and giving me more conviction about what I think could happen here. And I don't know about you, but anytime I break my rule, like for example, the rule is when we're in a bear trend in euro pound, Dave, I don't buy the euro. The euro's your preferred short, right? And when we're in an uptrend, the euro is your preferred long. The pound's your preferred short on strength. Mm-hmm. So there's probably no reason to buy the euro until we think we have a bottom in euro pound, don't you think?
Yeah, and that pretty much confirms what the euro chart, is telling me as well. But I mean, obviously, that's the other thing I think that a lot of people can take away is that if you're trading a currency, let's say it's the euro versus the dollar or Aussie versus the dollar, whatever it is, you got to really understand what the other what the Aussie crosses are doing or the euro crosses are doing, because they all play a factor. And again, you don't want to be long the euro if euro sterling's in a downtrend, or at least you've reduced the odds, in my opinion, that you're going to do well with a long euro trade. So it's how all the pieces fit together, and that's the thing that's really fascinating about currency trading, is that there's a lot of different things you can look at. You can get lost if you let yourself, but if you keep it pretty simple and just think about, well, hey, if I'm bullish the euro, let's say, are the euro crosses also bullish? Is the dollar index negative? I mean, just very simple things that you can kind of check off your list, and if they all line up, then you have a little bit more conviction about making a trade in that direction.
Yeah, it's holistic.
Yeah, there you go. Exactly.
And so you're taking a look at the whole picture and putting together the puzzle through relationships. And you did bring up Aussie. I'm wondering if you have a view on the Aussie yen cross. Chris Laurie describes it as the closest correlation to risk on, risk off, and it's been pretty weak. Considering the S&Ps are trading up near 2100 again. I was looking for maybe a rally back to 89, the breakdown of the daily, and then yesterday's action, whatever happened in Australia that took Aussie down, at least interrupted it. Do you have a view on any of the yen crosses here? Or the yen?
My view on the yen and the yen crosses is that I, largely speaking, avoid them. I'll dabble in dollar yen once in a while, but I've found that that currency and the related crosses always very challenging over the years. So I know where my strength is, and it's not in the yen or the yen crosses. How about that?
Yeah, it's also been a non-trade for a while anyway. Range-bound U.S. dollar yen.
Dollar yen's been a mess. Oh my God!
I pay attention to it because it kind of means a lot to me when I'm looking at 10-year yields and I'm looking at risk on, risk off in equities. So that's why I pay attention to it.
Yeah.
Okay.
I don't ignore it, and I would actually agree. I mean, I look at the charts. Do I really spend a lot of time getting accurate wave counts and making trades? No. But the whole concept of risk on, risk off, yeah, you have to be paying attention. And I'm a little bit. I mean, I've seen dollar yen come off the highs recently, but largely speaking, it's still very, very range bound.
Yeah.
Um, but I am
Well,
on the lookout for.
they've certainly cleaned out a lot of U.S. dollar bears with this recent move,
Oh yeah,
cleaning up tops over 21,
yeah. I mean,
21.30. To me, it looks
yeah.
like there's just one more level that if they want to knock out the rest of the yen bears, and I'm not talking about new highs for the move, but over 121.80, I'm sure there's at least one buy stop. I'd like to see that guy taken out before I look for shorts.
Yeah, and I think also, technical levels obviously are key. Obviously, dollar yen's not going to get that much higher unless the S&Ps continue higher, and for the time being, they are moving higher. So, if I had to make a call right now, the S&P is moving higher. Why do I want to defy that? I may have
Right,
low confidence in the rally, but that doesn't mean I want to
right,
get in front of the rally. So
right.
the odds of 121.80 perhaps being taken out again seem reasonable given the way the S&Ps are moving recently, given the way the dollar yen's moved off the October 14th low. And again, maybe the Fed says something today that makes the equity people really happy and they goose prices higher. We can't rule that out. Um, just a lot of moving pieces in this market. You try to keep it as simple as possible, but there are a lot of moving pieces, and we have had some price moves that are, you know, sometimes you're just scratching your head, going, "Geez, where the heck did that come from?" But
So I'm sure there are a lot of people watching gold that are scratching their head, Dave. I see it on your ETF screen
yep,
here, and gold, despite the recovery in the dollar and pressure in euro over the last week or so, has not responded to dollar strength and has held up quite well. Any view there? Everyone, the whole world was bearish at 1080 once we washed out one more time, and here we are knocking at the door at 1200. What
yeah.
do you think is going on there? Crude is not it recovered, but doesn't seem to have the same resilience as gold does these days.
Well, I'm going to give kind of a very, very broad answer. I have no idea when or even if gold has kind of bottomed out. I mean, I gave up on that game years and years and years ago regardless of the market I'm talking about, gold,
Yeah.
stocks, currencies, whatever. I do think that at some point it will be an amazing investment. I do have some small positions in some of the miners just because they do look decent from a technical standpoint.
Right.
Um, but I can't be a raging bull. I'm certainly not a raging bear on gold. I'm kind of neutral with a bullish bias. But again, I just
Okay.
need that catalyst. I don't know what that catalyst will be. It's obviously going to be noted in the prices and in the charts, but it hasn't happened yet. We've had a lot of false starts, and I just don't feel like getting nickeled and dimed to death. I have a theory or a view that gold will be higher in the years to come, but I'm in no hurry to load up the boat because there's just no technical evidence, or at least strong enough technical evidence that I want to be long these miners or the gold stocks or gold the metal itself.
Okay. I hope you're right. I'd love to see this rally end in the next several weeks or so and have one more washout into next spring in the gold under $1,000 an ounce. Actually, a number at another interview I was playing around with was the last bull market in gold in 1979, 1980 was 880, and then if you take the whole bull move in gold from 200 level to the 1900 level, 880 is about 61.8 back. And
Mm-hmm.
historical highs and lows are important, and I'm old enough to remember the Russian invasion of Afghanistan in late 1979, early 80. So
Mm-hmm.
it's just a number I have in the back of my crowded, overloaded information trader's mind.
we all suffer from over information at times.
What,
It's when you
what,
kind of
what do you
keep
do when
track
your
of
head's
things.
exploding with, saturation of great ideas and you want to be able to capture them all? And, that happens to me every day in our community.
Yeah,
There's,
exactly.
I said today, I wish I had enough money to take everyone's trade ideas, but I'm only 1,000 here.
Yeah, exactly.
You know what I mean?
Exactly. Um, so that's, at least in terms of FX and gold, that's kind of where I've got my, my thoughts on. I think one of the crosses that I've been looking at, and it certainly moves around like a son of a gun, is pound Aussie. I think there's an opportunity here on a shorter term basis. Again, very simple setup. Here, we kind of tagged a retracement level at about the 21420 level. Prices have bounced off that, so I think we head up towards about 216, maybe even a little bit higher. But I do think that there's an early stage, longer term bullish move ahead. I think we could head up towards the 220 level in pound Aussie. Just bear in mind, for those that have traded it, not for the faint of heart. It whips around pretty good. That's why you've got to really let price action come to you and not really chase momentum moves.
What's your average stop loss on a pound Aussie trade?
Well, in this particular trade, as you can see with the chart here, if you're looking to buy this for this pullback in here, let's say you bought this 21420 area pullback, I got to give it room from a technical standpoint all the way down to 21240. So basically a couple hundred pips, and because the way I always look at it is you've got to pick stops that are technically relevant based on the way you trade. So for the way I
not
trade,
money stops, market stops.
Exactly. So
a lot of people are taught this, Dave. Oh, risk 1% of your account or 0.5% of your account. Well, that may be a rule of thumb, but it's not a reason to put a stop at a money level.
Well, I would take that a step further. Yeah, okay, maybe you want to limit your risk on a per trade basis to 1%, but if you have a wide stop, you can still achieve that. You just have to trade less lots. So, okay, I've got a 200 pip stop loss in this particular trade. Anything less than 200 pips, like you said, is not technically relevant. I could put my stop loss at 21350. I could get taken out, and then prices could rip higher because that's not a technically relevant level, at least for the way I view the market. Unless prices go below 21240, I'm still bullish. So I have to have stops down there. Therefore, if you take this trade, and let's say you normally trade 2 standard lots, and now that's going to risk 2%, well, then you only trade 1 standard lot on this trade. It's really, that's the way you keep things consistent, and the whole concept of being scared, so to speak, by wide stops is kind of, it's not necessary. You just lower your lot size.
Dave, I'm sure you're asked this question a lot. I know I am. A lot of people would love to be a professional trader, trade for a living, and they ask me, well, Dale, how much equity do I need to have to be able to trade for a living? A normal figure would be something like, can I trade for a living with a $10,000 account? And I say, yes, if you want to live beneath an underpass. Mm-hmm. So do you give people numbers as to, that's their dream? Don't quit your daydream, but to be realistic, I know hedge fund managers are very happy with 25% a year on return on equity. And what do you tell people when they ask you a question like that?
I don't get that particular question too often anymore. My clients, the ones that I manage money for and the ones that subscribe to the research and alerts that I put out, by and large, are avid part-time traders. They're fully employed within, some other profession, management, firefighter, doctor, whatever it might be. And they have the very realistic view that they can achieve good, solid double-digit returns on their Forex account as a way to enhance their overall portfolio. if let's say you've got a portfolio of $500,000 because of your 401k, your IRAs, and all that stuff, and maybe you have 25 grand in your Forex account. Yeah, you can press that account using the leverage and come up with some great returns. But what I've seen over the years is, by and large, people are looking at this as a way to give a really nice enhancement to what they're already doing in their day job. And some people definitely do make this transition, but they typically have larger capital bases. $10,000, yeah, maybe you might catch that break and accumulate it really quick and start trading, $100,000 account, $200,000 account. But those are kind of the outliers. Those are at the ends of the bell curve. I think a realistic view is to use it as a way to really get some solid returns as an overall part of your portfolio. Keep your day job, keep your insurance coverage, and keep your family still smiling at you and not wondering why they're living under the underpass.
Just want to let you know, Dave, you're a trader's trader, because guys like Rob Booker came in to watch you, Sean Campbell, a lot of people tweeting that were excited about hearing your work, and you've given a live example of why people appreciate your work and your insights into the market. What would be the best way for people to stay in touch with you, Dave, perhaps get involved with you?
Well, the best thing to do is, there's two ways. I write extensively on my blog, which is at aspentrading.com. So if you want to get a feel for who I am and what I do and the analysis that I perform on a day-to-day basis, that's a really good way to get a sense. I also post pretty frequently on FX Street, a lot of the analysis, usually once a week or so. And then if you really want to dive in, and certainly I would encourage you, take a trial. I offer an FX and a stock service. You could take a trial for 30 days for $1. That'll give you a real sense of what I provide on a day-to-day basis. And I don't provide a lot of overwhelming information. I try to project how I view the market to my clients, which is, here's what you need to know, everything else ignore. I'm trying to sift through the vast amounts of information. That's my job. My job is to provide my clients a little bit of clarity and peace of mind so that they can go off and do their job knowing that, okay, I have what I need, Dave's got it handled, and he'll let me know if I need to make an adjustment.
Great presentation, Dave. Thank you for sharing your views on the dollar and pound Aussie, euro pound. You gave me some additional clarity to my thoughts before we spoke. Let's not let as much time pass this time between interviews, and my hope for you and your followers and mentees is that pips rain down on you during this fall trading season and holiday period, Dave. Thanks again for edifying my community, our community, with your work today, buddy.
Dale, I appreciate it as well. My sentiments to you as well. If I don't speak to you prior to the holidays, enjoy them. Health and happiness.
Thank you, buddy. Good hunting, my trading warrior brother, Dave Floyd, at aspentrading.com, Twitter handle at aspentrading10. Is that the number?
Yeah, that is correct, at aspentrading10. Love to have you follow me on Twitter. That would be great.
All right, Dave. Thank you very much.